are from Group 2 and today we will be explaining a little bit about Ajaib and Bibit. So Ajaib is an online brokerage platform offering stock trading, mutual funds, and bonds that targets millennial investors with a mobile-first approach. Ajaib's key features are commission-free stock trading, educational content for investors, user-friendly mobile application, and the last one, licensed and supervised by OJK. Bibit is a robo-advisory platform specializing in mutual fund investments, utilizing algorithms to provide personalized investment recommendations based on user risk profiles. Bibit's key features are, first of all, they have automated investment recommendations. Second of all, user-friendly interface. And third, low minimum investment. And the last one is licensed and supervised by OJK, just like Ajaib. From the market share perspective, Bibit has a strong position in mutual fund investments, especially among beginners, backed by major players like GIC and Sequoia Capital India, while Ajaib is leading digital stock trading platform for millennials and Gen Z, one of the first in Indonesia to offer easy mobile-based stock investing. Second, from their service range, Bibit is limited to mutual funds, using robo-advisory for recommendations, while Ajaib offers stocks, mutual funds, and bonds, making it more versatile for users with varied investment interests. Third is the user interface. For Bibit, they have very simple, clean interface tailored for first-time investors, while Ajaib is more dynamic UI, designed for users who want to engage and learn through slightly more complex beginners. Opportunities and threats for this specific category. They are growing digital adoption, Indonesia's increasing internet penetration, and smartphone usage facilitate the expansion of digital investment platforms. Financial inclusion initiatives, government support for financial literacy and inclusion opens new markets for fintech services. And last but not least, they have young demographic where a large population of tech-savvy millennials presents a substantial customer base for digital investment platforms. And for the threats, cybersecurity risks. So Indonesia ranks among the top countries for cyber attacks, posing significant risks to fintech companies handling sensitive data such as Bibit and Ajaib. And second of all, they have regulatory changes, which is evolving financial regulations may impact operational flexibility and require constant compliance updates. And last of all, market competition. The rise of new fintech entrants intensifies competition, necessitating continuous innovation and differentiation. Next is the market introduction strategies. Bibit utilizes social media campaigns and influencer partnerships to reach younger audiences, emphasizes ease of use and personalized investment advice to attract novice investors. And they also offer educational content to improve financial literacy among users, while Ajaib focuses on educational initiatives to empower users with investment knowledge and leverages a mobile-first approach to cater to the digital habits of millennials. And they also engage in community building through webinars and interactive content.
Okay, so first for suggestion for improvement, first for Bibit is the add gamification features, which is implement badges, challenges, and investment progress tracking. And it increases engagement and motivation for novice users. And second is the develop regional language content, which is provide educational materials in local languages such as Javanese and Sundanese. And it also expand reach beyond urban millennials and promotes inclusivity. And next for Ajaib, First, introduce AI-based investment simulation, which offer interactive risk-free market simulations. It helps users gain confidence and learn through the practice simulations. And next it's the collaborate with university investment clubs. It partner with student organization for event and competitions, and it strengthens community engagement and attracts young investors. Next, for the sustainability evaluation. First, Bibit is more sustainable long-term due to its focus on long-term investing habits and robo-advisory features, and strong retention through simplicity and Sharia-compliant options. And for Ajaib, may face sustainability challenges, and it relies on short-term trading behavior and heavily affected by market fluctuation and user activity. Next, we are going to CBDCs. What are CBDCs? CBDCs are digital version of a country official currency issued by the central bank. And what's the differences? First, with cryptocurrencies. CBDCs are centralized and stable, while cryptos are decentralized and volatile. And the differences with traditional money, CBDCs are fully digital and programmable, unlike cash or bank deposits. And why central bank explores CBDCs. It improved financial inclusion for the unbanked populations, and it also reduced reliance on physical cash and lower operational cost. It strengthened monetary policy with their better control and real-time financial data.
CBDCs could transform how we use money, but the path forward depends on how well each country balances innovation, trust, and also stability. And for Indonesia, the journey has just begun. Now, what about Indonesia? Bank of Indonesia is developing the digital rupiah under Project Garuda. They finished the whole wholesale phase testing and plan to move toward retail use in stages. Their goals? To support secure digital payments, strengthen the financial infrastructure, and also align with international CBDC standards. CBDCs offer big benefits: faster, safer payments, increased financial inclusion, and better tools for central banks to manage the economy. But challenges remain, especially privacy concerns, low user adoption, and potential disruption to traditional banks. Across the world, central banks are developing digital versions of their national currencies. China's digital yuan is leading the way. It's been tested in over 20 cities, accepted by millions of merchants, and used for everything from public transport to social benefits. India's digital rupee launched its pilot in 2022. It started strong, hitting 1 million daily transactions, but dropped when incentives stopped. Now, they're planning to expand access through platforms like Google Play. Meanwhile, the European Union is working on the digital euro, focusing on user privacy and reducing dependence on foreign payment apps. It is expected to roll around 2025. Digital money isn't just the future, it's already happening. Let's explore how countries are rolling out their central bank digital currencies, or CBDCs.
Next, let's start with the opportunities Indonesia might gain from implementing a CBDC. First, it can significantly increase financial inclusion with nearly 97 million unbanked Indonesians. Especially in remote area, a CBDC accessible via mobile phones can provide easier access to financial services. Second is the rise of digital payment trends like OVO, GoPay, and Dana. It shows that society is ready to adopt a new form of digital finance. Third, there's regulatory momentum. Bank Indonesia's Project Garuda outlines a structured phased rollout, starting with wholesale use before expanding to retail. And lastly, there's a chance for different countries to connect and work together using CBDCs, which could streamline trade and payment settlements with other Asian countries adopting CBDCs too. However, these benefits also comes with important challenges. Cybersecurity risks are a major concern. A centralized digital currency could be a high-value target for cyber attacks. Then there's the digital illiteracy gap. Many Indonesians, especially outside Java, may lack the skills needed to use digital financial services effectively. Regulatory uncertainty is another issue. With clear policies, CBDC implementation could disrupt monetary policy or commercial bank liquidity. Lastly, the private sector, especially payment companies, may resist adoption if it threatens their current business model. Now, let's compare Indonesia's CBDC's approach to few other nations. Internationally, Indonesia is known to be more cautious. So, China's digital yuan has over 200 million users in pilot trials. Sweden's e-krona is designed for a nearly cashless society. Meanwhile, Nigeria's e-naira is already live, aiming to improve financial inclusion. On the other hand, Indonesia wholesale first Project Garuda helps manage risk better and allows the country to adapt slowly, which is important for a big and diverse nation. So, should Indonesia move forward with the digital rupiah? The answer is yes, but cautiously. A thoughtful rollout supported by public education, strong legal and privacy protections, cybersecurity frameworks, and integration with financial technology apps alongside system is essential. The wholesale first approach helps reduce systemic risk before broader retail adoption. Looking ahead, CBDCs may boost Asian trade as it can let the government send aid directly using digital money and help make better and faster decisions using data. Economically, this can lead to reduced cash handling costs, faster transactions, and even reshape banking models as digital wallets become more common. To conclude the video, the implementation of CBDC in Indonesia presents a powerful opportunity but also a set of complex challenges. However, with the right education, regulatory frameworks, and collaborations across sectors, Indonesia is well positioned to adopt the digital rupiah in a way that benefits both its people and its economy. Thank you so much for your attention.